what I'm doing is keeping cash, and as deals come aboard that make sense to me today, I invest. And could things happen in the market over the next year or 2 years that make me go, oh, that probably wasn't the greatest investment? It's possible. I'm highly skeptical that I'll regret it in 5 years, though.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Our guest today is Steve Olson. He was on the show almost exactly 2 years ago. Interesting. It was WS 1104 or 1104. I encourage you go back even listen then. A lot has changed, and we talked about it right in the last 2 years. So it's an interesting time period. He goes back and talks about some things that have specifically happened over the last 2 years. But in case you don't remember him, he's helped the Fourplex Investment Group develop, build, and sell over 4,000 doors across the Mountain West and Texas. Helped move the company into new markets, developing for-rent townhouse project in Indiana, benefiting from a property tax credit program there as well. He's GP on ground-up rental projects in 3 different states. He's doing a number of different things, but man, he has become an expert in this space, and especially around why every investor needs to own fourplexes. You're going to hear that in another segment. Thankfully, we're going to get to spend some time with Steve and dive into a number of different things. But today, you're going to hear him talk about, man, what's happened over the last 2 years and maybe what to expect in the future as well. Steve, welcome back to the show.
Good to be back.
Yeah, honored to have you back on. I love highlighting guys like yourself and gals who just have a very high level of expertise, been in the business for a while, and just doing some amazing things. So I want to dive in. I know it's been, like I mentioned in the intro, it's been 2 years since you were on, and actually 2 years to the day today that we're recording anyway, that your other show went live. And so I'd encourage the listeners to go back and listen again. It's WS 1104. 700 and some shows ago. So Steve, but want to dive back in, give the listeners a little update over the last couple of years. What's happened with you? How has your all's business changed? A lot's happened over the last 2 years, right? Give us a little insight on what's happening, with FIG, and let's dive in.
Well, I mean, when you talk about what's happened in the last 2 years, just a little bit, it's certainly an interesting time to look back on and reflect. Last time we talked, I don't know that the market got much hotter than the last time that we talked. That was probably about the peak of the market, at least here in the Western U.S. in the Rockies where I am. And so things are substantially different right now. Back 2 years ago, land sellers were completely driving the bus and would get whatever they wanted. They would not give you the ability to eliminate your entitlement risk. They basically said, I've got land, you want it, pay me my money. In fact, pay me more, and you're lucky to get it. Close in 30 days. Thank you. Right? Those were the terms in late 2021. They've changed a little. I think that land sellers have backed off of their price a little, but they love that 2021 price. They want to get it. They're kind of waiting around to see if there's any suckers left that'll pay the 2021 price. They've budged a little bit on terms. Some of them I've noticed are willing to give you more time to close. They might let you get to preliminary plat. Some might even be willing to do final plat, though they might want some hard earnest deposits by then. So I mean, that's good. It doesn't make things pencil a lot better, though. The land equation is, a smaller piece of it. It's these construction costs and interest rates. We saw some relief in construction costs when the rate hikes began and demand was stifled to a degree, but in some ways they're kind of back up again. Labor is such a problem, and the whole world is growing and things are changing. This supply chain is a global thing now. So in a way, it's more efficient, but it's also more complicated. So that's a challenge for sure. And wow, on the interest rates, I've got like 18 deals on my board right now, and I just don't know which ones are going to work. If any, and it's that interest rate. So we've got to see that come down, or building costs come down, or rents go up. We can't be at this point where there's so little transaction activity. It's not I wouldn't call it a healthy market. So it'll be interesting to see when we record again 2 years from today exactly, because that's our thing, I guess, which one of those gave. Because I think it would have happened by then, but
Yeah.
everybody's got an opinion on this one, don't they?
Yeah, they sure do. Yeah, it's interesting.
Yeah.
You say 18 deals on the board right now, and it's a hard spot, right? Not sure if any of them will work because of the interest rates or construction costs or labor supply, all those things that you mentioned, all those unknowns, right? That have changed significantly over the last 2 years. Are those projects say that are under contract now? Or you all own the land, or where are those 18 deals at in your all's
Uh,
process?
it's a mix of everything. Yeah, yeah. Properties we're considering, pending LOIs, under contract, closed, and stuff that you closed 6 months ago that wasn't completely gift wrapped. Now you're having to re-engineer that thing and figure out how to make it work. Anytime your cost of debt is higher than your cap rate, it just makes it difficult.
Yeah.
So I mean, you get a little relief when we do fourplexes because investors do have the option to buy that interest rate down a little, and the rate seems to be floating right there. Where if you buy it down, you can flip that cap rate equation, but that requires an investor who believes that when they refi in late 2024 or early 2025, that's when most of our new stuff would be up for refi. That they're going to be able to do that or that rents are going to be higher. And so I think you take half the investors off the board just then because their mentality is, well, I don't know. I'm not playing that game right now. So, and I can't blame them. It's a really uncertain time to be deploying capital.
Yeah, yeah, no doubt about it. As far as those projects, I know this is where a lot of listeners are probably at right now as well. Whether they're passive or active, they're invested in a deal that they probably did exactly what you just said. They bought it 6 months ago, right, or 12 months ago, and now it's like, man, what do we do? Do you have an example or two that's like, man, okay, this is how we have shifted? You gave one there, but anything else that's like, man, okay, we're gonna make this deal work, be able to make this deal work because of this thing we did, right, or whatever it may be, where you all got creative to still make something work.
Well, there's one I'm thinking about in Texas where the city required what's called a condo plat. Now, I do some ground up GP work where we develop a site and we bring in LPs, a lot like what you talk about on the show. But the bread and butter is selling off individual fourplexes in a master plan community. But this particular city had been insisting on a condo plat. And a condo plat basically means the investors who buy the duplex or the fourplex don't own the ground below their units. That's going to be like an HOA or some kind of other entity that owns that. And so anytime you do that, the tricky part is if investors want to own that with 30-year fixed rate debt, the same kind of debt you buy your house with, uh, the Fannie Mae will not allow more than 50% of a condo plat to be investor owned.
Mm,
Problem is we're 100% investor owned from day one. And so that means we got to go commercial or some kind of portfolio financing, which is even tougher because now we've got debt coverage ratios, we've got bigger down payments, we're fighting against the current. So we've gone back and retraded this seller for more time to go back through the city and do a traditional plat and have to hopefully talk some sense into the city about this condo plat thing doesn't do what you think it's going to do. It,
right.
it actually just complicates things more. We need to go with a traditional plat here. So that's a key factor. And I've other things we've been doing too. And this is like we're getting into the weeds, but hey, you asked me, so I'm going to
Yeah,
tell you,
please.
and I'll keep this one simple. But especially in Texas, you've probably had people on talking about the brutal increase in insurance costs.
Yes.
In the Houston metro, companies that write policies for an HOA, right? We do a bunch of townhomes, there's a master policy over the top. I think they're down to two insurance companies in Houston right now that do those. And boy, do they know it, right? They're going to jack that bid up through the ceiling. And then the Harris County property tax assessor has joined the party as well, have just rapidly been increasing assessments. you try to go in and fight and appeal those, and they're so overwhelmed that they've hired, pardon me, glorified TSA workers to do their tax appeals. And so it's not the most efficient process. And so, where do you get savings? Do you just say, I'm not going to develop in Texas right now? A lot of people have said that. But one thing we've done is we've gone HOA light, right? We're trying to do fully detached buildings so we don't have to do a common insurance policy over the top. Owners can get their own insurance, and the carriers haven't bailed out as much on something like that. Now you can get Nationwide and Allstate and State Farm. You got a lot of choices. And then we're going zero escape on everything. We don't want that water and sewer bill. I mean, you wouldn't want that anyways, but this tight cost environment is making us have to really, really think. And if you do that, you can slightly nose right up to where cap rates and interest rates are about even. So now it's a question of how much time do we got? Something's going to flip here at some point over the next 6 to 12 months. Where do we get interest rate relief? Because I firmly believe if rates today, or if rates in a year are where they are today, that's a lot more renters in the pool.
Mm.
Those are people that cannot buy houses, and that's eventually going to have an effect on rents, as painful as that would be in an already inflationary environment, right? So that, I think, the rates would be what gives before that. But that's just something we're thinking about, because you gotta grab those dollars wherever you can. This may be a good thing, because it really makes you have to think and get creative.
Yeah. I know we've talked on the show with numerous guests recently. I mean, there's times that are tougher, right? Exactly what you said. We've got these 18 deals in some spot, and then the interest rates go up, or all these things, and all of a sudden we're in an environment that we didn't expect, and we're having to get creative in ways that otherwise we wouldn't have. Right? We wouldn't have worked so hard to get as creative as you are now without this environment. I think many of us will be better, in the long run, right? Because we've had to get creative. We've had to think out of the box. And unfortunately, there'll be a number that won't, right? And probably won't be operating, in 2 years from now. But the ones that can get creative, can think out of the box, like you're talking about. Man, we got 18 deals. What are we going to do? We're going to go to the city. We're going to go to do these things. We're going to change the way we operate a little bit so we can make things happen. I like that that thought process, right? And being pushed in those ways. It's not always comfortable, right? It's not always the fun thing in the moment. But I do think that most that will push through that they'll be better operators, right, in the long term because of it.
I think you need about 10 times the work to get about half of the result that you used to right now. That's the way it feels.
Yeah.
And real estate's funny, because I look back on it. I've thought of this over and over again. If it was easy, everyone would do it, because it seems like there's always one piece of the puzzle missing, where you go, I've got all these things humming on all cylinders. If I could just have this thing work out. But that's why you're making a profit, because you figured out how to make that work. And if anybody could just come along and plug that in, this would be a very, very crowded space. So it's, right now it's the interest rates. A year, 2 years ago, it was supply chain. I mean, pick a number. It's always something.
Yeah. And I normally talk about this more, or ask more about it during the end of the show. But this is a great place to talk about. You mentioned like you expect something to happen, right, in the next 6, 8 months or 12, as far as interest rates, or maybe interest rates are going to change. Not sure. How are you preparing, for maybe what you expect to happen? You talked about it a little bit, but maybe we, dive into that a little bit more at the moment.
Well, it depends on the nature of your project, of course. I just think it's smart to have a lot more cash on hand. We've got a couple projects we're selling right now that are platted as single townhomes, and we kind of ended up there. They weren't originally intended to be something that Fig would do, but our ownership group kind of ended up with this land. It's single townhomes. I thought that wasn't going to do very well. I was very surprised to see investors gobble those townhomes up. And as I talked to them, the general sentiment was, I've got cash. I just don't want to jump into the deep end of the pool right now. 1 or 2 townhomes is something that I can do. So this talk of timing the market, I'm going to wait till X happens. I'm going to wait till Y happens. I don't know when or what that is, and neither does anybody listening to this, as much as they might think so, right? We all have our opinions about it. So what I'm doing is keeping cash, and as deals come aboard that make sense to me today, I invest. And could things happen in the market over the next year or 2 years that make me go, oh, that probably wasn't the greatest investment? It's possible. I'm highly skeptical that I'll regret it in 5 years, though, because I'm the type that always likes to be investing because I don't know what the market will do. So I think keeping cash so that you can jump on those as they do pop up, and then fixed rate debt, fixed rate debt, fixed rate debt, and buy interest rate caps when you can.
Yeah, I think it's very wise advice. Even you saying, I'm not sure what's going to happen. I don't know what's like nobody really knows what's going to happen 6 months from now, right? But I love just hey, we're going to have cash on hand when the deals come. We're going to be prepared, right, to invest. And so I just I think it's very wise, and I think it's being prepared with cash. Cash is king, right? No cash, you crash. And so,
I remember '08. I remember '08, Whitney, and it was you couldn't give real estate away. It was the end of the world. I mean, CNBC, when Lehman Brothers collapsed, they were literally talking about, so is this it? Is this when we all punch out? They were freaking out. And I remember eventually we regressed to the mean, which was people need somewhere to live. All the financial markets and all the chaos didn't change the fact that you have to lay your head somewhere at night. And until they invent a technology where that's not the case, I am bullish on real estate over the long term. So there's a lot of noise in the market right now, but I still think we got to live somewhere. And generally, most of these assets, there are exceptions, of course, they're occupied. Tenants need somewhere to live. It's your capital stack. That's the problem. That's funky. You got to figure out how to fix that.
So many things to look forward to right over the next year, I think. Hopefully it's not an '08 time period again, but man, I still think even going back to what you said, having more cash on hand, you're gonna survive longer, right? With more cash.
Whatever most people think it's going to be, it's probably not going to be that.
Yeah.
That's so things tend to surprise us. I mean, if everybody could predict what was next, we would never have these kinds of things happen.
Right. That's right. Steve, I think it's a great place to end this segment right here. And I want to jump in there. I want to make sure we have time for, we're going to jump into a few more of your expertise for the listeners, and so your passion project as well in another segment where I'm looking forward to learning more about that. I want listeners know we're going to do another segment with Steve. He's been very generous with his time. Grateful again, Steve, for you coming back on the show. Even though it's been a couple of years, and hearing where you all are at now and what you're up to, how you're looking at the economy right now. And so, Steve, how can the listeners get in touch with you and learn more about you?
Pretty easy. Just go to fig.us. That's our website. You can contact us through there. You can find me there as well.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.